Hi, everyone. This is Jason Barrick of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. We had him on, I think, in December around Christmas. It was Mr. Hankey's Christmas version of gold and silver market analysis. Thank you for joining us again, Craig Hemke, a.k.a. Turd Ferguson of the TF Metals Report.
Hey, Jason. It's always a pleasure.
Now, Craig, we have a lot going on in the gold and silver market. Coos Jansen just keeps putting out great news. What's your opinion of the Shanghai Gold Exchange being able to eventually set the price soon of the gold and silver markets instead of the LBMA and the COMEX?
Well, I suppose that's an eventuality, Jason. Life as we know it is shifting that direction toward these creditor nations being to, I guess, set up the new financial system for the world, the next global monetary system, whatever is going to supplant the dollar eventually. So everything is heading east. Global gold trading is certainly headed that way as well. It's not something that's going to happen overnight. I mean, the change is gradual. The impacts are coming slowly. But eventually, I'm sure you're right. That is exactly where the center, the global hub of globe trading will be. It will be in Shanghai and sit around there in Hong Kong.
Yeah, well, when I look at the market, I see that as inevitable as well. I mean, the Chinese have had conference calls with GATA, so they're aware of what's going on in the market, and they seem to not want to blow up the market, immediately. They seem very content with just continuing to accumulate physical metal at these, very discounted prices due to the paper markets being able to be moved, however the people in power or hedge fund managers or these high-frequency trading algorithms want to be able to move these markets. But where do you think all the gold is coming from? Because we see data coming out that Steve St. Angelo and Eric Sprott have done studies on this, saying that there's a lot more gold being exported out of the United States than is being produced by mine supply. And when you hear stuff coming out from Swiss refiners, Jim Rickards has reported this and others have reported this, that they're getting, old scrap gold. Where do you think the majority of this gold is coming from?
Yeah, that's the $100,000 question there, Jason, is we don't know. And you look at the export numbers out of London as well, and all this gold flows into Switzerland. We've been hearing these anecdotal stories now for a couple of years about the major refiners in Switzerland all running 24/7. Cranking out, taking these old London 400-ounce bars and converting them into 4.9 quality kilo bars and then shipping them off to points east. That information seems to be indisputable. At the same time, you got to wonder, like you said, where is this gold coming from on the front end? I mean, is it all Bank of England gold and storage gold in New York that is being leased and sold with the thought that eventually it would just come back and the leases would be matched up and the original owners, whoever that is, would get their gold back? It's impossible to say. But, yeah, you're right. The work that Sprott has done, the tremendous work that Steve St. Angelo has done, certainly makes that point, that it just leaves you scratching your head. Where the heck is it coming from? And getting back to what you'd mentioned earlier about the Chinese, one theory that's been out there in the market for about as long as I can remember is that the Chinese are the major players in shorting paper metal to drive down price. There's really no way to prove that. It's all just speculation. But I can tell you, as long as I've been trading commodities, which dates back to the 1980s, there have always been stories about the Chinese shorting the whatever paper derivative market might be of whatever commodity it is that they are searching to acquire. If they knew they were going to be in the market for hundreds of millions of bushels of wheat, then the rumors were always there, and maybe you could see the footprints that the Chinese were in there selling wheat futures on the Chicago Board of Trade to drive price down, and therefore they could get more wheat when the time came to take physical delivery. And that has been the rumored modus operandi of the Chinese, like I said, for decades. So the idea that they could be behind the manipulation, or at least one of the driving forces behind driving paper prices down, so that as they convert dollars, they can, instead of buying, they get 3 ounces for every 2 instead, and in buying gold at these prices. So that could very well be what is behind it all, their gradual accumulation of gold at the lowest prices possible to give themselves a kind of commanding spot in this next global paradigm. I mean, certainly makes sense, and I certainly see why they would do it that way.
Yeah, I've heard the same rumors from different sources about the Chinese being that shrewd. They have a lot of the people that work in their central bank and their sovereign wealth funds. They have Wall Street experience. So they've been there trading at Wall Street firms, working investment banks, and then they went back to China to help, reform the financial system in China and try to get their houses in order in China, at least from a financial perspective. Not talking about the rest of the problems in China. China has problems too.
Well, certainly, yes, and maintaining control of their 1.2 billion person population is obviously probably chief on that list, no doubt about it.
Yeah. The Chinese government is focused on maintaining control over social media. They have a big firewall. I actually just finished this book about it called Age of Ambition. If our listeners want to check it out, that brings up to combine these things. We've heard Ted Butler come out with the theory, I guess, that J.P. Morgan is standing long for delivery for all these physical silver ounces on the COMEX, but we don't know if they have a client. That maybe it's China. Maybe
right.
China hired them to help them get delivery of some of these ounces of metal. Is that possible in your opinion?
It's certainly possible. If I recall, wasn't one Chase Manhattan Plaza bought by a Chinese firm just a couple of years ago?
Yeah.
Then that's the one. That building is the one that at 9 levels down below grade level is the major vault that's actually right across the street from the Federal Reserve Vault of New York, right?
Yeah, I heard actually underground, right? Aren't the two vaults? There's a walkway connected to them, right?
Exactly.
Yeah.
They walk back and forth between the two. So that could very well be the case. What we do know is that prior to 2011, there were only 5 licensed CME-approved silver vaults for the COMEX. In early 2011, in the spring of 2011, it was rushed through, kind of rubber stamped really, really quickly, that there would be a 6th vault, and that vault would be owned by J.P. Morgan. So back in 2011, there was no J.P. Morgan vault. There was no J.P. Morgan eligible silver stockpile. Now today, if we look at the numbers, they get cranked out every day. If we look at just Friday's CME silver stocks report, we see that the J.P. Morgan's sitting on about 55 million ounces of silver in that vault, of which I think something 47 or 48 million are marked as eligible, which means it's not ready to be sold. It's not there to be used as deliverable supply, at least in its current form. So is that J.P. Morgan's gold? Is it a client like China's gold that's just sitting in the vault? We don't know, but what we do know is that's 50 million ounces of silver, which J.P. Morgan conceivably has their hands on that they didn't have 4 years ago. Ted Butler has been all over this story for years. He actually speculates that J.P. Morgan's been the primary buyer of silver eagles from the mint, and they've been accumulating upwards of 200 to 300 million ounces of silver, which I have no idea. Ted's a much better expert in all of this than I. There's no doubt that J.P. Morgan has a lot of silver, and what they're planning to do with it is all part of the interesting story going forward. Excuse me, Jason.
Now, Craig, do you expect China? We have a lot of experts coming out in the gold and silver community who expect China to announce some type of update to its gold holdings. I mean, officially, they only have, I think, 1,000 tons approximately of gold. But I mean, if you go and look at their import data, they have at least there's at least like 3,000 or 4,000 worth of tons of gold that they've imported. Do you expect them to update the market with some kind of increase in gold, maybe either by the end of this year or in the next 12 months? Or do you think that they're not going to update at all and just continue to accumulate as much physical metal as possible, as cheaply as possible?
Well, a couple things there. You mentioned Koos Jansen's work. He's definitely the guy to follow on Twitter or at his employer's site, Bullion Star. He's the guy, Koos is the guy that has made himself into the global expert on Shanghai Gold Exchange withdrawals and how much gold's flowing into China. And using Koos's numbers, yeah, you can come up with anywhere from 5,000 to maybe even 10,000 metric tons in China at this point. The last time, as you mentioned, they actually updated for the world how much they had, it was only 1,000 tons, and that was back in 2009. So we can rightly extrapolate that forward and assume they've got 4, 5, 10 times that. To your question as to when would they announce, when will they give us some idea how much they have, they'll do it when it's the most advantageous to them to do it. I mean, they're not. So I wouldn't expect it anytime soon. I mean, we all kind of thought, well, any day now, and that was 2014, and then earlier this year, and all that stuff. There are some folks like Jim Rickards that speculate that China wants to be included in the IMF's SDR, and that for inclusion in that, they're going to come out and actually give a number. Even if they do give a number of how much gold they have, I wouldn't count on that being how much they actually have. I mean, they would probably state a number that's just the minimum threshold that they'd have to be included in the SDR. It's impossible to know how much they have. It's equally impossible to know when they might actually tell everybody how much they have. But I think it is possible to have some idea of what they plan to do with that gold. And that's what will set everything in motion or for this new global financial system, something that will replace or challenge the dollar for reserve currency status in the years ahead.
Yeah, in Jim Rickards' books, I forget which one, if it was Currency Wars or Death of Money, he quotes a source who worked, I think either at the Perth Mint or another very large refiner of bullion, saying that they personally helped move over 400 tons of physical gold across the border with the Chinese army, just in a matter of weeks. Well, so, I mean, this is off exchange. Maybe it was bought, maybe this transaction was done partially over the counter on the LBMA, but it was done off exchange, so it's not something to bring up a red flag. But it's just, I don't think it's in China's best interest to come out and announce the real number, the real amount of physical gold they have. I think, if they want to diversify their holdings out of the dollar, out of the euro, out of the yen, whatever their reserves are in, it's just smart to, play it close to the vest, be coy about things, and just continue, getting out of their paper and, buying oil when it's cheap. They've been stockpiling oil and buying gold and silver and things like that. And just as a, insurance and diversifying out of paper.
Exactly. And out of their U.S. dollar obligations and dollar reserves. There was actually a story, and if you'd like, I can send you a link because I wrote about it a couple of weeks ago. There was a forum held in Rome about diversification of the renminbi and getting it out into the world as a trading vehicle and as a possible reserve currency. And at that conference, the chief economist of the Bank of China, which is China's largest commercial bank, not the People's Bank of China, not their central bank, but their largest commercial bank, the Bank of China. Their chief economist said, and is on record, it was quoted as saying, that this process of internationalizing the renminbi and offering it as a reserve currency alternative, this process has been going on now for a couple of decades. And that it has actually increased and is moving toward completion. And he actually gave it in. He said it would be done before 2020. So, hey, you don't become the chief economist at the Bank of China if you don't have pretty good connections in Beijing. So the fact that this cat was saying that, we've got only at a maximum, 4 more years before all of this is offered as an alternative to the world. People got to be listening to this stuff. It's definitely coming. It's not just pie in the sky, doom and gloom, some kind of weird conspiracy theory. The periods of that currencies have enjoyed reserve currency status is transient. The U.S. has been there now for 70 years, and its days are numbered. And the Chinese are telling you that this is coming, and everybody had better pay attention.
Yeah, the global financial system, Craig, I'm really surprised that it's been held together this long. I guess maybe there's a lot going on behind the scenes. I've reported about massive amounts of currency swaps, and, there's so many rules changes where banks don't have to declare, their real amount of assets. They can they don't have to mark to market. They can mark to model. And, there's been all these rules changes to just basically keep the system going as long. We have the Federal Reserve, Janet Yellen, coming out and lying about how, we don't want asset prices to go higher. Well, I can cite, tons of evidence where the Federal Reserve has paid academic economists, over $100,000 over the last decade for numerous papers to these economists to write about the benefits of the wealth effect. And, the white papers that Ray Dalio and the two economists, Carmen Reinhardt and Ken Rogoff, who also wrote about, financial repression and the wealth effect and stuff. So there's just mountains of evidence if people look on these white papers over decades that the Fed wanted asset prices higher, and now you have Janet Yellen coming out and lying how they don't. So it's just really amazing that the people in power, whether it's the Federal Reserve or the politicians, have been able to keep things going this long, without another type of crisis.
Well, and I've been asked quite a few times over the last several years, what is the number one thing I've learned in in all of this blog stuff and website stuff that I've been doing now for almost 5 years. And it's exactly that. It's the surprise of the powers that be and their ability to cling to power and keep the system propped up for as long as they have. Again, it probably last again tomorrow and into next week as well, but eventually we can be certain that it's not sustainable, and the system is built on an increasingly shaky foundation. And that's why we continue to talk about gold and silver. I mean, they still are your best protection. It's been a very challenging couple of years in terms of watching the price go up and down. And the price is certainly down for both metals from where it was a couple of years ago. But I would submit to you that given the current state of the global environment, not only financially but geopolitically, though the price is down, your precious metal that you own has never been more valuable, and it will continue to get more valuable in the weeks and months ahead.
Yeah, we to add to your point there, Tur, we've had the Bank of International Settlements come out with multiple warnings about how the system is not sustainable. We've had the same things from the IMF. You know, maybe they're just trying to reorganize and create a new system where they still maintain power, but there is some truth, at least in some of their statements coming out, how, you know, the current system is not sustainable, and you know, there's not room for a lot of the central banks to keep printing unlimited amounts of money without, you know, enormous ramifications with destruction of global currencies, you know, whether it's currency wars or we've had other people saying that, you know, these currency wars are a false paradigm, and that, you know, everything's really coordinated by the central banks, where one central bank is, oh, we've done enough QE. Oh, now it's your turn. You know, the U.S. has done enough QE. Oh, Japan, it's your turn now. Oh, Japan and the U.S. have done enough now. Now it's Europe's turn. So it's just, there's so much stuff going on behind the scenes, I guess, just to keep things propped up. My final questions here have to do with corruption in the financial industry. You've worked a long time in the financial industry, longer than I have. Was corruption always this prevalent when you first got started in the financial industry?
I suppose to some extent it's always been there, no question about it. I mean, I go back to the 80s and the things that were going on at Drexel, Burnham Lambert, and Michael Milken, you know, and there were always stories about, you know, the Gordon Gekko types that were out there and the green mailing that they were doing, all that kind of stuff. But I really, there's almost a soulless quality to what happens now, in that because there are no repercussions, because nobody ever gets caught, because you know, there's and I shouldn't say nobody, outside of a few patsies that are put up, you know, like this dude in London that was supposedly blamed for the flash crash of 2010. You know, I mean, outside of that, no one's ever held accountable. And so it just seems like now, absent that, everybody, or not everybody, but so many folks just figure, hey, look, it doesn't matter. I'm going to do whatever I need to do to get rich. I'm just going to, you know, bend the rules however I want, because all that matters in the end is how I did and how my bank account looks. And so it does seem, to get to the answer to your question, it does seem more prevalent and worse, if you will, than it ever has been. And then, again, that's just another sign of the decline of the financial system itself, and the lack of respect for rule of law. Because if you don't have a rule of law, if you don't have that type of oversight over the markets, then you don't really even have markets. And then in the end, as you just mentioned, with central banks all taking turns doing quantitative easing, and you look at the reports just last week of the size of the Swiss National Bank's balance sheet and how many equities they own. And we know that the Bank of Japan is outright creating yen just to buy their own ETFs on the Tokyo Exchange. And you look at all that, we don't really.
And China's putting out feelers now. China's about to do a large their own version of quantitative easing and bond buying. Jim Rickards is reporting it, and we're also seeing news stories out too.
I mean, we don't even have a market in the first place. You know, you go back. I remember back when I first got a license to be a stockbroker in 1990. You actually filled out. You had red tickets for sells, and you had green tickets for buy orders. You had to write them out by hand, you know, 200 shares of Con Edison, you know, and you sent it through a little tube, and the wire operator put it in, and it got filled by some specialist on the exchange. There's nothing like that anymore. I mean, 80% of the volume on the New York Stock Exchange is high-frequency trading computers nipping each other for, you know, hundredths of a penny on each trade. There's nothing real about it anymore. So the fact that these non-real markets are continually being scammed by people that are just trying to gain advantage for their own self-preservation, knowing full well that they're never going to be prosecuted for any fraud or anything like that. I guess that all goes hand in hand now that I think about it.
Yeah, I think it all starts with, lack of morality, whether that's the start of fiat money and so many other things of corruption. We're just seeing, I think this week, last week, there was a story about how Congress was fighting in courts because they didn't want to be busted for insider stock trading. So, there's all these insiders
right.
in D.C., God knows how many campaign promises they made or how much loans they had to take out just to, if they didn't fundraise, if they weren't able to fundraise on their own. But, once they get to D.C., they think they're above the law because they write the laws and they want all these perks. So they want the ability to sit in these committees or subcommittees where, their phones are taken. They're not supposed to do that. And they want the ability to trade on inside information and get preferential IPOs to make extra millions of dollars. So you have these congressmen who, they come to D.C. with barely $100,000 in assets from a poor district, and 5-10 years later, they're worth $10 million.
Yeah.
they're worth $10 million, and then they're set up after however long their career is. If they've done a good job with their contacts here in D.C., they could go work on K Street, in a lobbying firm, and they can make 7 or 8 figures a year very, very easily for the rest of their lives.
Right. And look, I'm not trying to make a commercial for saying I know what's coming next. And I certainly am not going to try to say that whatever is coming next is going to be good for everybody, and an improvement on the current situation. But what I will say is anybody that listening to you and I talk and sits here and recognizes that, it really is corrupt and there is no longer any rule of law, you have to then recognize that this current system is not going to continue. Like I said, that's not a commercial saying, so therefore the next system is going to be so much better and you've got to buy all this gold. That's not what I'm saying. What people should recognize, though, is that the current system is not going to continue. It is falling apart. It will fall apart. You can't have a financial system based on a foundation of lies and misrepresentations and corruption. And so it will crumble, and then all bets are off as to what's going to come next and whether that's going to be good for the average person or not.
Yeah, there used to be a lot more respect for the U.S., but now people are just mostly fearing the U.S., especially foreign countries. I just watched the documentary Citizen 4 yesterday, which featured, Edward Snowden and him leaking stuff. And to see the foreign government's reactions, Craig, to how the U.S. was spying on these foreign governments, for economic advantage and all these other things. Literally they had been getting metadata and all these other facts collecting from governments that we're supposedly allies with. It enraged them. There's permanent damage there to the friendly trade relationships and other ally relationships that the U.S. used to have. So, the long term, if the U.S. keeps this up or things get worse, people aren't going to trust the U.S. enough to, want to even trade with them going forward. So, the U.S. is definitely going to be on a decline if it keeps printing massive amounts of money and spying on its, supposed allies and things like that. So it's just... It's just very frustrating, and things have stayed going longer than we thought. But I think the rest of the world is getting so fed up to the point where prior to 2008, there wasn't all these things in place like the Asian Infrastructure Bank and currency swap lines, many billions of dollars. But we're seeing evidence that all these other countries are combining with each other to set up alternative systems here, whether it's the SWIFT system and things like that were not in place prior to 2008. So the people who are saying, that the U.S. was going to collapse prior to 2008 and the dollar was going to collapse and all the systems, there weren't all these other foundations in place to switch to a new system.
Well, and Jason, if you and I can see this, just a couple of regular guys, it's clearly has to be obvious to the powers that be in places like China and Russia and India and wherever. I think for them, 2008 was a wake-up call. They were able to see, oh, wait, geez, Louise, this is really a house of cards, and we're tied into it. And they have used the intervening 6 or 7 years probably helping to contribute to keep the current system propped up while they make these preparations. And then a point will come where a new morning will dawn and the paradigm will have shifted, and then we'll just have to see what comes next. For everybody listening to us, you know what we do at TF Metals Report? We talk about gold and silver and owning physical precious metal and preparing for what we call the end of the great Keynesian experiment, and that's what this is. And that's what everybody needs to do. They need to keep their eyes and ears open. They need to think for themselves. They need to be, the military term is situationally aware. They need to be alert and aware that all these things are coming so that they're not, caught in the crowded firehouse when somebody yells, or in the crowded theater when somebody yells fire, and then all headed to the exit at the same time as everybody else, because that's always a recipe for disaster.
Yeah, I completely agree. That's sound advice. You don't want to not have any batteries or bottled water or food when the hurricane's coming tomorrow, Class 5, right?
Right.
Or you don't want to be stuck in your house without boards or even in the area around when you know that there's a disaster coming. And just because the disaster hasn't occurred yet, or you haven't been in a car accident for a while, or your house hasn't burned down ever, doesn't mean you shouldn't have fire insurance or anything like that.
Exactly. And again, the certainty of what you and I have discussed is what people need to be confident in. And then just, again, continue to use this intervening time to make disaster preparations, again, ahead of what is most certainly coming.
Yeah, I completely agree. Well, I just want to thank you again for your time, Craig. I really enjoy your website. You put out some good interviews. Please tell our listeners more about your website and your podcast service.
Again, thank you, Jason. It's TF for Turd Ferguson, tfmetalsreport.com. It's a great online community, first and foremost, of like-minded folks, just like you and I, really, Jason, that they see this coming, and we're all in the business of helping each other prepare for it. And frankly, we're all in the business of kind of holding each other's hands through. It's been a rather challenging couple of years. But nothing has changed. The dynamics haven't changed. All of this is still coming over the horizon. So we're all there to help each other out. There is I have a subscription feature that's a whopping $10 a month for people that are looking to, maybe trade or get to know the metals a little bit better. There are podcasts there. There's webinars there. But the site itself is still free. People can show up and get to know a whole bunch of other folks that look at the world the same way. Again, tfmetalsreport.com.
Okay, great. Well, we'll have you on back in a couple months, and we'll see. Maybe China will surprise, and we'll actually announce gold reserves. I know there's a number of other people I talked to who think they will announce in the next couple months, but who knows what's really going on in China? I mean, they do so many false information. They're really good poker players over there.
Well, that's right, and we're here in the U.S. We think in terms of hours and days. I mean, they're thinking in terms of decades and centuries. And you got to keep that in mind. It seems like, it's been 6 years since they updated their gold holdings, and everybody wants them to have done it yesterday. But as we discussed, they'll do it when it's most advantageous to them, and we just have to be patient.
Well, I think everyone wants them to update because they're hoping it'll boost the paper metals prices, right? Because of this, paper bear market, cyclical bear market that we've had since 2011, and people want their mining shares to go up, and the people who bought precious metals for higher paper price gains, for capital gains, they want those prices higher. Because I read the comments in some of our interviews and stuff. There's people asking if they'll ever get back to being underwater again, but they're not thinking of why they bought the metals in the first place, and they went all in They went all in at the wrong time. You're not supposed to try to time the market perfectly and go all in just because, you hear one expert or guru say, oh, it's going to go to this price or something like that. I think it's just smart to be prudent and buy a little bit when you have some. Don't put all your money into precious metals, but buy some every couple months or dollar cost average or things like that. But, that's easier said than done for most people. They want to just do one thing and set it and forget it and, get rich quick.
Sound advice, Jason. No doubt about it.
Okay, great. Well, thanks again for your time. I appreciate it.
Hey, my pleasure.